With over half of enterprise security budgets going towards detection and response in 2020, the challenge is investing in solutions that can migrate and scale with your business. ExtraHop helps security teams spot threats up to 95% faster and respond 60% more efficiently in hybrid and multi-cloud environments with cloud-native network detection and response. Kick the tires in the full product demo at securityweekly.com/ExtraHop.
Welcome back to Business Security Weekly. I am your host, Matt Alderman, joined by Paul Asadorian. Visit securityweekly.com/webcast to see what we have upcoming. Learn about Rapid7's findings from the National Internet Cloud Exposure Report on August 13th and how to create and run a conference from the geniuses behind Layer 8 Conference and Wild West Hacking Fest on August 19th. Or you can just go to securityweekly.com/on-demand to view all of our previous recorded webcasts and trainings. All right, our next segment, Doug Hubbard is the founder of Hubbard Decision Research and is focused on building better business impact decision makers for big, risky decisions. He's an award-winning author who has sold over 150,000 copies of his 4 different books in 8 different languages. Doug offers his global client base of Fortune 500 companies, federal and state governments, the United States military, and major nonprofits, including the United Nations training and consulting, revolving around his quantitative methodology called Applied Information Economics. Doug, welcome to Business Security Weekly.
Yeah, thanks for having me, Matt.
So this started, I got to tell people the story. You and Richard Seierson wrote a book about 4 years ago, How to Measure Anything in Cybersecurity. Richard is a good friend of mine. He and I used to live like literally 2 miles apart in a little town called Larkspur, Colorado. When you guys wrote the book, he's now in California. And I remember having conversations with you way back in the days about your quantitative techniques. And you guys wrote the book. Today, I want to focus a little bit on kind of a refresh of one of your books called The Failure of Risk Management, because, you know, we still struggle as a security industry, I think, in really measuring risk and quantitative risk. I mean, I did author a patent years ago when I had my GRC startup called Control Path that did attempt to quantitatively measure risk. I know a lot of the mistakes I made back then. I've learned a lot since then. But I'm curious, you know, why is it so hard for us to measure risk in the security space?
Well, I suppose the first thing to recognize, and thanks for having me on your show, is that I think it's a mistake to think that some risk in some industries are uniquely more complex than risk in other industries. We get to practice our business in many industries for many professions, including cybersecurity, but also in many other areas, military logistics, disaster planning, environmental impact with really long range studies, new medical devices, prioritizing R&D investments in aerospace and biotech. They would all claim they're particularly complex and difficult measurements. So I guess from my outsider point of view, Richard, as you know, he's the real cybersecurity guy. I'm the outside quant who came together with Richard to write a quantitative textbook. Well, a book about quantitative methods, not so quantitative itself, but a book about the value of quantitative methods in cybersecurity. And a main point we were making is that the methods that cybersecurity needs to adopt aren't new. Lots of people deal with risk involving intelligent actors, involving complex change in environments, involving large numbers of variables they can't possibly identify completely, and where, let's say, you have lots of uncertainty, which is really the basis for having risk in the first place, is you have uncertainty about future outcomes. So none of that's really new. And I think that's a key thing to capture for anyone in cybersecurity. If somebody believes that their type of risk is a unique and different kind of risk, it can only be because they're just unfamiliar with how other people deal with the risk in nuclear power and aerospace R&D and many other areas that routinely deal with complex issues.
Now, some people would say we don't have enough data or enough history to extract into a quant model. I think the most common use case would be insurance, right? Actuarial tables on how long somebody's going to live that's used to assess life insurance policies and the risk of somebody dying at a certain age point, right? Mm-hmm. But that's not necessarily true, is it?
No, it's not. When people think about insurance as an example, they're always thinking of retail insurance, the typical kind of insurance that a consumer would buy. And in those cases, they have tons of data. That's true. But there's lots of areas where insurance companies compute premiums for things that have never been done before. How did somebody at Lloyd's in London compute an insurance premium for the first communications satellite to fly on a SpaceX rocket? How did they happen? Or here's another way to look at it. I would say that you are unique, and you can tell me, I'll believe you. Have you ever died before? You have never died before, I suppose, right?
That is true.
So what does an insurance company know about your rate of death other than that you haven't died yet? And yet you're unique. How can they possibly say anything about your mortality rate? How can they possibly compute an insurance premium for you? Well, they interpolate from a large number of heterogeneous examples, right? So a bunch of other people who aren't exactly like you. And the same thing can happen in cybersecurity. And in fact, when you're familiar with the math in risk analysis, especially Bayesian risk analysis, you can figure out how you may not need nearly as much data as you think to improve on your current state of uncertainty. I happen to be wearing a kind of a Bayesian joke t-shirt right now. I don't know if your podcast is showing videos. I don't know if most people will be watching on video, but it reads, there's two types of people in the world. One, those who can extrapolate from incomplete data, period. and that's that's the reality for cybersecurity, right? So of course you have to extrapolate from incomplete data, just like everybody else who does quantitative risk models. Right? If we had all the data, we probably wouldn't need probabilistic models in the first place. We use probabilistic models because we lack perfect data, not in spite of it.
Yeah, well, it's interesting, and I think many of us in security are like about debunking, right? And it's interesting. I learned about how to measure and debunk things not because I was enrolled in computer science or business information systems, but because I minored in science, environmental science, right? And I had an awesome instructor. And in one of the first classes with my instructor, he gave us a lab, and it was how to measure a flame. And like the lab really sucked. Like we had this candle, and we had to like measure it, and we're like, what is going on? And he's like, we'll make it better, right? But it really got us thinking about kind of what you're talking about, right, is to how do we determine the probability of things that are very uncontrolled, that we can't really predict, right? Predict how a flame is going to move depends on so many different factors, right? And that carried forward into information security because we're measuring things all the time that we don't fully understand.
Yeah, sure. Well, and the beginning of all of that is to understand what the word measurement really means, at least what it's mean for nearly the last 100 years in the empirical sciences. Measurement means a quantitatively expressed reduction in uncertainty based on observation. It almost never means the complete elimination of uncertainty.
Right.
It means a reduction of uncertainty. You know more than you knew before. Mm-hmm. So this is an interesting way of looking at it from the point of cybersecurity when people consider using or not using probabilistic methods. Because remember, if they don't use a probabilistic model, they're going to use another model. There's no choice not to model it. You are modeling it. It might be your intuition. It might be a risk matrix, but you're still modeling it. The only question is which model is measurably better than the other.
Right.
Or to put it in another way, since a famous statistician, George Box, said that all models are wrong, but some are useful, I just point out, well, some are measurably less wrong than others. And so if you look at it from the point of view of I have all this complexity, I have all this lack of data, how does this modeling method versus that modeling method alleviate any part of that? Does a risk matrix alleviate complexity? Makes us feel better about it, I grant you that. But does it alleviate it? Does it alleviate the lack of data? No, it just brushes over it. Makes you feel better about it by being ambiguous. That's all it does. There's actually there is something called an analysis placebo I talk about in the second edition of my second book, The Failure of Risk Management. So the analysis placebo says, there's a lot of studies about this, but if you adopt a method that seems structured, where you collaborate with your peers more and you've got some formal process to go through in order to make a measurement or inform a decision, you will inevitably feel better about your estimates and forecasts, regardless of whether or not your performance improved. In fact, your performance might even go down and you would still feel better about it. So do you just experience an analysis placebo when you think that your risk analysis on cybersecurity is working? And when you reject a quantitative model because you believe it's too complex to model quantitatively, or you believe you don't have enough data, how does the alternative model that you chose, whether it's a risk matrix or something else, how does that alleviate any of those problems? And when you compare the two side by side, what does the research say about their measured performance? Because we have a lot of data on that. There's been a lot of research on the measured performance of using ordinal scales, of using two ordinal scales in a risk matrix. And there's been well over 100 different studies comparing statistical models, even sometimes relatively naive statistical models, compared to human judgment, expert judgment. And hands down, across the board, time and time again, we keep finding that even naive statistical models are beating human experts. This is true. I mean, this might not be great for our egos as experts, but I look at it as tools, right? Quantitative methods are our tools that we get to employ. We're not threatened by our other tools, our cars and our circular saws and power drills. We're not threatened by those. Let's not be threatened by quantitative methods. Let's just look at the measured performance of the different methodologies we're talking about. Don't just dismiss something because you heard once from somebody that some model somewhere had a bunch of error in it, right? And therefore, you're not going to use quantitative models.
But Doug, I mean, it's not so much about errors, though, because I go through this with folks in InfoSec and in friends and family, right? Because I think it's very similar things, right? We may look at our data that's presented to us in our own networks and go, "Oh my God, attacks are on the rise," right? We look at the media today and what friends and family are putting out on social media, and I'm like, well, that could be true, but it's probably not. And the commonality is basically like missing data points or missing factors, right? Attacks may be increasing in my network, but that's only because, well, someone made an oops on a firewall rule and let some more stuff in, not because more attackers are targeting us, right? And I feel like it's the same thing when we see statistics on the news that there's going to be a really bad thing that's going to happen to everyone, and the data is showing this. And I'm like, well, that's just because they're missing that. They didn't tell you about this other data point, or they didn't know about it. I mean, does it kind of boil down to missing data points?
You do get a lot of superficial reporting of scientific studies. Mm-hmm. So that's one of the reasons why people lose confidence, I think, in quantitative models, is because a news organization will come out and report something about some quantitative model, and it's contradicted by another, but people aren't reading the research, and they don't see that, well,
right.
Wait a second.
See, I'm a nerd. I go read the research, and I'm like, well, yeah, that's what the media concluded, but if you go read the study, that's not really what it's saying, right? There's a lot more there. You're absolutely right.
Well, Matt and I were talking about this last time, is that, people say that when it comes to COVID-19, all the models are wrong. Well, I suppose they mean all the statistical models are wrong, because I would say, yes, all the models are wrong by definition. Mm-hmm. Any model that's perfect is called reality. It's not even a model, right? Mm-hmm. So a model is by definition an abstraction of reality. Right. So, but your model may be intuition, but the thing is that, yes, all the models are wrong, but were the quantitative models less wrong than the other models, like people's intuitions? Because people's intuitions didn't do very well either, okay? And in fact, there's more than a dozen models that are actually part of the COVID-19 forecast. Which specific ones were wrong? When someone tells you that they're all wrong, name them. I know 14 of them that are just in the United States, just US ones. So name 5 of them and tell me what they specifically said and what error they gave, and tell me whether or not the observed outcome fell within their stated error. And how well did that do compared to your recorded previous intuition? Probably they didn't record it. So, There's kind of a I knew it all along kind of response to whether it's something about COVID-19 or to cybersecurity. An event will occur, and people, because they don't record and document their original opinions, or they don't publish them for everyone to see in advance, they can later re-engineer their own forecasts and say, I knew that all along. But I would challenge people to do that. I would challenge them, if they believe that their intuition is better than a quantitative model in some specific definable forecasting method, start tracking and documenting and publishing your forecast against a particular quantitative model and compare them side by side. Publish them in a public way that you can't go back and change them. I would challenge you to do that.
Doug,
by the way, we are doing that. Our COVID-19 model, which we've been doing for clients, started with the insurance industry since back in February, is published for public consumption. And you can see what we've been doing for the last 3 months. If you just search on my name, Hubbard, and GFOA, Government Finance Officers Association, and COVID, you'll find the dashboard that we routinely update. And by tomorrow, we'll update another month. We'll go out another 60 days and forecast out. But you'll see where our performance has been in the past. It's all published. You can take screenshots of it. You can test whether or not we're changing it over time to make our past forecast look better or something like that. Nope, we've published it. Because that's what you should really be doing if you're going to say that a model that you have, maybe in some people's cases, it might be their intuition or a risk matrix. Make a specific forecast and compare that to a quantitative model.
Doug, one thing we do a lot of on the shows here on Security Weekly is we read a lot of studies that are based on survey data. And I think the one thing that we pick on those are selection bias. But I want to get from you, because you're hands down probably one of the greatest experts we've had on the show on this particular topic, right? There's not just selection bias in terms of the number of people and who you're asking the question, but it's how and what questions you're asking. And it seems there are surveys that come out every single week, and we read them, and when you dig into the data, you're like, well, you're just kind of twisting it basically to have your outcome that is the most positive for whatever your goal is, right? I guess my question is, like, how do we analyze and study this survey data that's coming out to actually be useful to us to either debunk or take away things that are useful to our daily life?
Well, as the consumer of data like that, you should always look for first a conflict of interest. When you look at scientific published research, and I've had the opportunity, even though I'm just a consultant, I'm just a practitioner, I'm not originally a researcher, but I have had the opportunity now to publish a few peer-reviewed papers in scientific journals and mathematical journals. So I've had the opportunity to do that now. But when in those situations, people generally need to disclose conflicts. I think that's a key thing. You should disclose conflicts. But in defense of surveys, I'll say this, though. Even a flawed survey isn't necessarily completely uninformative.
Right. Yeah.
I talked about examples with this where you can work out how much you'd be willing to pay for, say, a digital scale that had some error in it, where half the time it just gave a random number between 1/10 of a gram and 10 kilograms. And would you pay for that scale if you set up a game where you had to estimate the weights of things, but you had to pay to use this scale to better estimate them in advance? Would you pay something? And when you do the math, you say, yeah, actually, I would still pay for it, even though half the time it comes up with a completely random answer. The question is how much better are your bets on average? You look at something like, playing blackjack. Card counting is not a real big advantage. It's a marginal advantage over a large number of hands. You see what I mean? Mm-hmm. It's only a slight marginal increase. Look at a bank who gives out a lot of business loans. What do you think a bank would pay to have 1% fewer loan judgment errors? Like 1% fewer bad loans are given out and 1% fewer good loans are denied. What would you think a bank would be willing to pay for that? That's a very small reduction in error. Do you think that a COVID test with a false negative rate of 30% is informative? The math says yes, if you combine that with other symptoms like low oxygen levels with an oximeter reading and a temperature for fever. If you combine that, you can do a Bayesian analysis. It actually tells you something. Can it affect public policy? Yes. So people hear things like it's wrong 10% of the time, and without doing any math, they say, well, that's useless. No, that's not actually what the math says. It's not useless. Now, of course, you'd want better ones, but lacking that, it's not useless either. So this comes back to cybersecurity in a number of different ways. People imagine things that could be wrong about a quantitative method, and without ever asking, what do I know about the performance of the non-quantitative methods, they just assume that they should prefer the non-quantitative method because they believe that they lack the data. And I know we talked about this a little bit, Matt, but you have more data than you think, and you need less data than you think. We talk about a number of methods in the book, and I also talk about other methods in the second edition of my second book, The Failure of Risk Management, which isn't specific to cybersecurity. It has a couple of cybersecurity examples, but it's not specific to cybersecurity. It's about risk management in general. And we talk about things like Laplace's rule of succession and the beta distribution, how you can make inferences and other Bayesian methods where you can make inferences from very small amounts of data. Because in those situations where you have a lot of uncertainty, those are precisely the situations where a few observations greatly reduce your uncertainty. So you may have come across situations where people believe, they sort of assume that if you have a lot of uncertainty, you need a lot of data to measure something. Does that sound familiar?
Yeah. We're just saying it's the opposite.
Yeah, mathematically speaking, just the opposite is true. The more uncertainty you have, the bigger uncertainty reduction you get from the first few observations. So if you know almost nothing, almost anything will tell you something. That's what the math actually says. People wing it with the math all the time. You may have heard somebody use a phrase like, that's not a statistically significant sample size.
Yeah.
You ever heard of that?
Yeah, well, we do talk about that with surveys, right? Because the whole thing with surveys is the math says that we need at least 500 respondents to have a data set that we can draw conclusions from. But
yeah, it doesn't work that way.
That's not necessarily the case, is what you're saying.
Yeah, it doesn't work that way. It depends on what conclusions you're trying to make. And there's a few other considerations. You want to design a survey to have a certain power and so forth. And there's all the other qualitative issues you brought up earlier about, asking the right questions and how they're interpreted. But in terms of sample size, there's no universal number where if you're one short of that, you can't make an inference. In fact, if you ever hear somebody use the phrase statistically significant sample size, they don't know what statistical significance means. That's the one thing you can conclude for certain from someone who says that. They have no idea what that means because there's no such thing as a statistically significant sample size. There is a concept called statistical significance. It's a function of many things other than just sample size. And you can have a very small sample, depending on the hypothesis you're testing, that has a statistically significant result. And of course, you could have a sample of 5,000 that is not statistically significant. And statistical significance has nothing to do with whether or not you reduced your uncertainty. That's an important concept when you actually study what that term means. This was partly what one of the papers I wrote. I wrote a paper for the American Statistician. It was a special issue on scientific statistical method in science. And I was writing about statistical inference methods like null hypothesis significance test, among other things. You can get a statistically significant result, which tells you nothing you didn't already know. And you can also get a result which is technically not statistically significant, but is informative. Because counting cards, the blackjack table, is not a statistically significant process. It's only a marginal reduction in uncertainty. But it's informative. It's useful enough that casinos don't want you to do it.
Doug, do we as humans make those inferences when we analyze this data because of the way our brains work? In other words, like you've seen the test where you can put up a sentence or two and you could miss a letter or a word somewhere and our brains will just kind of fill it in for us. That applies when we're analyzing study data in the results of the analysis, right? Do our brains kind of fill in those blanks?
Well, we certainly have expectations when it comes to assessing risk. And in fact, our actual tolerance for risk changes daily for reasons we're not consciously aware of. This is why, among other things, we promote methods for quantifying and documenting risk tolerance because of all the weird things our brains do. Also, there's plenty of research on the weird things our brains do when we use ordinal scales for judgments. There's actually a series of phenomena. One group of phenomena is called the illusion of communication. And there's another phenomenon called partition dependence, where arbitrary features of the ordinal scales, like you've seen in risk matrices, they might have an impact, which is moderate, critical, severe, something like that. And the likelihood is extremely unlikely, likely, somewhat likely, something like that. You've seen that sort of thing, right?
Yeah, all the time. Yep.
Right. And the scales are very simple, but our brains are more complicated than that. So we do all sorts of weird things with our responses because of arbitrary features of how the scale was set up in the first place. And it's a lot less of a function of things we're assessing than just the features of the scale that the designer made up to begin with. That's disconcerting because we would like to think that a lot of our judgments couldn't be influenced by such arbitrary factors, but in fact, they are. All the research says that is exactly the case. Fortunately, there's other research that shows how we can alleviate some of those issues. We can reduce some of the effects of those random external factors that are detriments to our judgment.
But, and Doug, and what you're saying is that it really underscores the problem when we go to our management as security professionals with that scale of it's critical level vulnerability and the likelihood that it's going to happen is 9 out of 10, and management goes, yeah, well, we're not going to deal with that issue right now because of like human nature. I mean, that's one of the greatest struggles we've had in security over the past 30 plus years or more, is really underscoring the risk, even with data, and it oftentimes is dismissed because of just other factors, right?
Well, it's interesting. Everything you're describing to me further reinforces the idea that the challenges you deal with are not unique to cybersecurity.
Right.
Do you think there's the issue of human nature in other industries and professions?
Oh, we've made tons of analogies, right? Like people breaking into your car, breaking into your home, like the whole thing. Yeah, absolutely.
Yeah, absolutely. Of course, the factors you're describing are so common. I hear them in every industry I work in. Whether I'm talking to a biostatistician or an environmental engineer or a nuclear engineer or military logistics expert, in all of those different areas, we hear similar challenges. Everybody says, but I don't have enough data. There's, on the military side, they certainly deal with malicious actors, right? On the military side, do they get to? Yeah, of course they deal with that. Do they deal with complex changing battlefield situations? Having to make lots of complex missing factors? Yes, of course. And what they realize is that the alternative methods that they're considering, like a risk matrix or qualitative high, medium, low scales, don't alleviate any of the challenges that they're listing. They simply make them feel better about it. You want to make sure, no matter what kind of risk you're assessing, cybersecurity or otherwise, you want to make sure that your risk assessment method is not just a placebo effect. It's not just a placebo. It's not just making people feel better about it. And in fact, placebo is not a very good analogy there because placebos do have physiological benefits you can measure. I'm talking about situations where there is no measurable benefit other than you feel more confident in your estimates and decisions. So cybersecurity is one of these areas, which again, this is not unique to cybersecurity. It's specific to risk management in general, but it's one of those areas where you get very slow, delayed, infrequent feedback, right? I mean, you implement a control, which you hope reduces your risk. How long do you have to wait around to see whether or not it worked? Would you ever know?
Right. You may never know.
You may not.
Right?
Yeah.
You may lock your door every day and no one may ever try to walk in through your front door, so you may never know, right?
Right. But so how do we have data? Because I challenge people to think of this. No matter how little data you think you have more data than you think. So let's think about an insurance company for a moment, and not the ones that do the, life insurance, like the typical consumer retail products that we usually associate with insurance. I'm talking about the bizarre stuff, right? like a concert pianist insuring their hands, or insuring a communication satellite on the first launch of a communication satellite for SpaceX or something like this. How do they do that? How do they work out the probability of a particular event occurring at a nuclear power plant, which has never occurred at any nuclear power plant in many thousands of plant years of history? Because there's been a large number, a couple of hundred different nuclear power plants around the world and decades of service. So there's many thousands of power plant years of data.
Right.
And there are some events they model that have never occurred anywhere. So how do they do that? Well, what do you think? How do they do it? It's like this. I have never in my life, or there's no one I ever know who's ever done this, filled a bucket with dice and then rolled the whole bucket. You probably never knew anyone who did that. I didn't. I've never done it. But I can tell you with a high degree of confidence what the mean is going to be if I just know how many sides are on the die, right?
Right. That's just math, right? Basically.
Right. That's just math. So I know something about the behavior of components of that system. So that's what you do in nuclear power, and that's how SpaceX doesn't have to make 100 rockets and just trial and error, see which ones blow up or not. No, they do the math. They know something about mean time between failures of different components. And what's interesting is that the different risk analysis methods we're all familiar with have been component tested. Even though you get slow and frequent feedback on your risk analysis method, the components of your method have been thoroughly tested, and there's decades of research on the performance of each of them. We know a lot about the performance of different subject matter experts. Not all subject matter experts are equally good at forecasting, and we can measure who's better. And we know which training methods make better forecasters out of subject matter experts. We also know that people who build Monte Carlo simulations seem to be better at forecasting than people who don't. That's good to know, right? How about this? Naive statistical models, even very simple linear regression models with 2 or 3 variables, leaving out all sorts of complexities, still beat human experts in prognosis of diseases, the failure rates of small businesses, which married couples are more likely to get divorced in 5 years, et cetera, et cetera. In all of these areas, one researcher, Paul Meehl, had collected over 150 studies like that. And he said out of all those studies, he could only find 6 where the humans did just as well or slightly better than the naive statistical models. So the jury is in on this stuff. I mean, we know a lot about the component performance of different components that are used in our methods. We know that ordinal scales add error to your judgment. They may make you feel better by labeling things on simple ordinal scales, but they actually add error. And so do risk matrices. That's why one of the biggest studies on risk matrices that's ever been done, was done for the oil and gas industry, but they looked at 30 different risk matrix methodologies. And when you read them in detail, they sound an awful lot like risk matrices in cybersecurity. They look exactly the same, in fact. 5x5s, maybe some 7x7s, high, medium, low stuff, all the same stuff. And what they concluded is that, quote, risk matrices should not be used for decisions of any consequence. That was their conclusion.
And yet we use them all over the place.
Actually is measured to work. First off, math works pretty well. Math does work, even with limited data, because it does, even especially in cases with limited data, math works better than our intuition. Remember, intuition is still a model. And all the models are admittedly wrong. We admit that to begin with. Intuition is one of those models. So which model is less wrong than the others? All the research keeps pointing to quantitative models, but I'm not just saying accept quantitative models, out of hand without further inspection. Always be skeptical. Keep insisting on evidence for the performance of any model that anybody tries to sell you. My models or anybody else's. Look for evidence of performance and be able to answer this question. What if somebody comes to you and says, what's the ROI on our risk assessment methods? What can you tell them? Are you able to compute that? You should be able to. There's plenty of basis for doing exactly that, computing the ROI on your risk assessment method itself. So be a skeptic, but be just as skeptical about your own intuition and the intuition that your subject matter experts claim, or, these colorful, risk matrices. Be skeptical. ask for the evidence that they work. Richard Searson and I, when we wrote that fourth book, How to Measure Anything in Cybersecurity Risk, we collected a lot of that research. And then I collected even a little bit more when I wrote the second edition of my second book, The Failure of Risk Management. So there's tons of research on this. We have a pretty good idea of what works and what doesn't. And the most popular qualitative methods are the ones with the worst track record across the board. And the ones that have the best track record are the ones that people keep insisting don't apply to them because they uniquely lack sufficient data. They do this without doing any math, by the way. When someone says, we'd like to measure that, but we don't have sufficient data, that sounds familiar in cybersecurity, right? Mm-hmm. We'd like to measure that, but we don't have sufficient data. That's a specific mathematical claim. When someone makes that claim, does that mean they actually computed the uncertainty reduction they would get from a given amount of data, and they computed the economic value of that uncertainty reduction within the context of a particular decision to determine whether or not that effort was justified? No, they didn't do any of that, did they?
No, they use their intuition.
Yeah, they're making qualitative, intuitive judgments about quantitative methods. That doesn't work. You can't use our qualitative intuition about quantitative methods, because often the mathematical methods contradict our intuition, and it's not the math that's wrong in those situations. I mean, you can make a math error, of course, right? And then you say that doesn't sound right, and then you find the error. But I'm talking about the math that's actually well-founded, that there's a good proof behind it, and it's counterintuitive, right? Like I'll ask people a very simple question. I randomly sample a large population, a giant corporation with 100,000 employees, let's say, and I'm going to randomly sample 5 of them. And I'm going to measure how many minutes per day they spend in some particular activity. Maybe it's related to cybersecurity or something like this, right? I'm going to measure how many minutes per day those 5 people spend in cybersecurity. What's the probability that the median of the entire population of 100,000 employees will fall somewhere between the largest and smallest of that random sample of 5? It's 93.75%. And if that's counterintuitive, it's not the math that's wrong, it's your intuition that's wrong. I think, Matt, you might have mentioned Daniel Kahneman's book last time, Thinking Fast and Thinking Slow. I'm not sure if you brought that up. Maybe I did, I forget.
Yeah, I think you did. Yeah.
I might have brought it up. But he also, among other things, he did some research on intuition versus math. And he found out that people have strong intuitions about random sampling that are fundamentally wrong. And that was his thesis. And he demonstrated this with multiple studies. So I think that's something we should bear in mind, that what people think they know about how quantitative methods work are often mistaken. And the first clue is if they use a phrase like statistically significant sample size. They automatically, you can say, okay, they don't understand the concept. Secondly, if they believe without doing any math that they don't have sufficient data for something, because they probably have more data than they think, but when you do the math, you need less data than you think. That's the other key thing. And in fact, when you have a lot of uncertainty, that's specifically when you get the most uncertainty reduction from even the first observation. Okay, it's that phrase again. If you know almost nothing, almost anything will tell you something.
Doug, I want to read all your books now.
Yeah,
I'm just saying.
Yeah, I mean, the book.
I love this topic.
The book he and Richard did was a fantastic book. I read it a couple years ago. And when we had this opening for the interview, and I'm like, I got to bring Doug on. We actually talked to Richard about this. I think in the BSW segment almost a year ago when we brought him on. He talked about aspects of this. Doug, it's just been a fantastic conversation. I mean, I don't think people really understand the power of quantitative risk. I think what you did today is kind of let us know, look, the math doesn't lie. You've got enough data. You should be using quant models. Don't use your instinct, and qualitative models don't work. So I want to thank you for joining us today.
I'll qualify that in one way. We still use subject matter expert instinct, but with some caveats. We train them, and we measure their performance at subjectively estimating things. That's the key thing. So it's just like any other field where you have to calibrate your measurement instruments, right? And we're saying do the same thing here. Calibrate your measurement instruments, in which case this is your subject matter experts. And you can use your subject matter experts to populate the initial state of quantitative methods. So we don't completely reject subject matter experts. But their intuition about how quantitative methods should work is usually false. But if we train them in a certain way, if we calibrate them, you might have heard Richard talk about calibration training. We train people to get very good at quantifying their own uncertainty, and we've measured their skill at doing that. Well, then you can use their estimates in your quantitative models.
Got it. And then refine them and improve them as you continue to move forward. Yeah.
Right. All models are about continuous refinement and improvement. Keep being a model skeptic, including quantitative models, right? I mean, I'm not just saying always accept the quantitative model. I'm saying be a skeptic about models, but be equally skeptical about the judgment of your subject matter experts, especially if they haven't been calibrated, and be very skeptical about qualitative methods. And when you look at the research, you can still be skeptical about quantitative methods. Keep testing the quantitative methods. But as soon as you start testing the relative performance of methods, you find out that you're not going to be using that risk matrix anymore. So the one takeaway I would say from this is go cold turkey on risk matrices. Just stop using them. They actually dilute the judgment of your experts. The judgment of your experts are something we like to preserve a little bit more of. We don't want to dilute it. We want to preserve the judgment of the experts and further refine that, and then use that to populate some initial states of quantitative models, which can be further refined with objective observations. And those of you familiar with Bayesian methods will know exactly what I'm talking about.
Yeah, I think that's a great takeaway. Throw away your risk matrix. Doug, thank you so much for joining us on Business Security Weekly.
All right. Thanks a lot, Matt. Thanks, guys. Thanks, Paul.
Thanks, Doug.
If anyone wants to learn more on how to quantify risk in terms of dollars and cents in order to build better business impact decision makers, please visit hubbardresearch.com. Paul, thank you for joining me. Thank you, everyone, for joining us today. We'll see you next week at our normal day and time on Business Security Weekly.